Welcome back to Raw AI Solutions, the podcast where we discuss how business leaders are navigating the world of AI and business transformation. I'm your host, Denise Powell, and today we are joined by Butch Meily. He's the president and president of Ideaspace Ventures, as well as QBO Innovation. So, Butch, welcome to the podcast.
Thanks, Denise, and thanks for having me.
Would you mind telling us a little bit about yourself and both your companies?
Well, I had there are two different groups. Ideaspace Foundation is the startup accelerator of one of the major conglomerates in Southeast Asia. I mean, they own hospitals, water, power, telcos, mining, all kinds of companies. And in 2012, they decided to begin establish a startup foundation. That's how Ideaspace started. And the whole idea, they invested a lot of money in it. And the whole idea was to rejuvenate or revive the startup groups here first in the Philippines and then Southeast Asia. And at Ideaspace, we take equity in different startups, which we then are free to either hold or sell, depending on the circumstances. QBO, on the other hand, Denise, is a totally different animal. We started in 2016 as a public-private sector partnership with the Philippine government, Department of Trade and Industry, Department of Science and Technology, and JP Morgan. And the idea there was to provide free space, free coffee, free events, free Wi-Fi, free services for startups. Anybody that said he or she was starting up a company, we welcomed. And we've been able to grow, believe it or not, companies that are worth $500 million now just from that free space.
That's fantastic. So basically, they come in via QBO, and then Ideaspace really helps them grow. And so it sounds like it really goes hand in hand together, which is excellent.
It can, though. I wear two hats. At QBO, I'm neutral. I work with any organization, any company, but at Ideaspace, I'm very much focused on a pipeline for our own conglomerate, which is Philippine Long Distance Telephone, Metro Pacific, First Pacific in Hong Kong. So we try to line up synergies for them. So that's a very different idea than what QBO does.
Yeah. Well, such a varied thing that we're looking at over here. Tell us about your journey. What got you into the sector? How did you get to where you've got to?
Well, my whole background, to be honest, is corporate. And I'd lived in the U.S. for many years, and I was asked to come back to help out the country by the chairman and CEO of this whole conglomerate, Manny Pagilinan. And I came back, and at the time, they asked me to handle several things, and one of them was the Ideaspace Foundation. We'd gone through several changes of leadership, and I felt it needed a steady arm at the top, and they for better or worse, they chose me. And the whole idea was to keep it going. Really, it's had an enormous effect on the whole ecosystem here. 2012, there weren't too many venture capital firms. There weren't too many startup enablers. There were only just a few startups at the time. Today, landscape's completely different, partly because of Ideaspace and similar corporate startup enablers. We've managed to fund over, I'd say, 200, 300 startups in the last 12, 13 years. We just graduated our 13th cohort, and we've taken equity in a fair number of them, 50, 60 of them. Now, as you know, startup investing is risky, inherently risky. But our portfolio today is worth a substantial amount of money, but we focus on early stage startups because our ticket sizes are not as large as the venture capital firms. Yeah. But we try to get in an early stage, take a percentage, and then we grow as the company grows. QBO, on the other hand, is completely different.
What are the early signs that you can tell this company is going to be successful versus that one?
Well, the founders are the key we've discovered over the years. If you have a good, strong, focused, passionate founder, that's half the battle won. And if they're flexible and they're willing to pivot, so they can have the wrong idea, they can have the wrong foundation for a startup, but if they're flexible enough to pivot, to change it, then we see that the startup continues to grow and move on, and the team grows with him or her. So the founders and their characters actually are quite important. We've also had some issues with people, running off with the money and then going off to different parts of the world. So we've learned to be careful as well.
Yeah.
Integrity is important. Integrity is important.
It's everything.
Mm-hmm.
So tell me something. Have you seen any major shifts or industry changes over the last 12 months, especially with AI coming on the horizon? What's really here?
Well, everybody's talking AI. So, it's a flavor of the month. But a number of startups have incorporated it into their systems. But we have noticed a funding slowdown, to be honest, in the last 6 months or more. People are much more careful, both regular investors and corporate investors, family firms. The money isn't flowing as much as it used to. So that's changed things. But we're in there pitching. We continue to graduate these cohorts of ours, and we serve as a funnel. Ideaspace is a funnel of early stage startups to the rest of the ecosystem, not just here in the Philippines or Southeast Asia, but to the world.
Brilliant. So if those are the shifts that you're beginning to see, how are you going to overcome those challenges, especially the funding beginning to dry up or slow down?
Well, funding is always an issue, but we provide some of it by investing in these startups, the ones that we believe in. And we also provide a network of connections, both within our group of companies and with the rest of the private sector. And we've noticed more partnerships, cross-border partnerships. One of our exits just a month or two ago, we got several times our initial investment, and it involved a Thai holding company taking over a Philippine. I don't want to give the industry, so I'm not allowed to give out the details yet. But they took it over because the revenues were substantial, and the founders not only got a fortune in terms of for 7-8 years of hard work, but they also got a share in the company that's going public on the Thai Stock Exchange sometime next year. So it's a double win.
Yeah.
And double win for investors as well. We got several times our investment, and we get a share in the IPO.
That's fantastic. So basically, you're in a position where investors can come to you to say, we've got money we want to invest in, or do you go out to investors to say, listen, we've got these firms that we think would be great to invest in?
We do both.
Mm-hmm.
We have a team that's focused on investing. But just today, Denise, I did have a conference call with a large foreign venture capital firm in which they proposed investing actually a substantial 10-figure amount of funding in us in order to focus on early stage startups and help grow them, and then help them exit at some point in the future. We also have a partnership with the local stock exchange, Philippine Stock Exchange, which is down in the dumps, and they're looking for something new to drive investor interest in the market, and they're turning to startup.
And the startups that you look at are literally only based in Asia only?
Well, they're based in Asia, but we found an enormous number of people moving over here from Russia, from the United States, from the UK. You'd be surprised. We have all these people coming over because they like the workforce. and find it easier to work with. I think they're hardworking. They're generally English speaking, and the wages are a little less. And they found it easier to start companies here, despite a lot of government regulations. But we've got Israeli founders who have exited, who we've invested in and done well. So they come from all over the world, and they've relocated their family in order to start these businesses, and they've done fairly well.
So you work with early stage founders, juggling like product sales, fundraising, team management. Where do you see like tech stress showing, especially across founders and teams?
It began with COVID. I mean, it didn't start there, but COVID certainly accelerated it. But the whole idea of working from home, young people, when we try to ask them to come back to work, there's that built-in stress between the traditional company corporate culture, to be honest, where I grew up in, and the new hybrid culture of many people preferring to work from home and actually refusing to come back. So we've had to juggle that, and I found that younger people, they are much more conscious of their personal time.
Yeah.
But in addition, tech is, as you know, Denise, tech is intrusive. I mean, the exchange for all that convenience is that there are no borders between your work life and your home life, and it seems like you're always on, which I hate, and I know they hate. And the younger workforce seems much more prone to quit when they feel like it. In the older days, people tend to stick with a company 20, 30 years, and they tended to put up with a lot more. I mean, I spent over 20 years working in New York City, and I can tell you there was a lot of yelling, and shouting, and cursing, which I don't think they could get. I think that still happens today, but you always get the risk of getting canceled. And social media, if they get you on social media, it's just an explosion that's difficult to deal with.
Yeah, absolutely. Do you think people are more productive with home working, or do you think they're more productive when they're in the office?
It depends on your point of view. I've heard managers take opposite points of view of that. I mean, executive director of one of the organizations feels they need to be at work. She's losing her control, her sense of bonding with the workforce, that we're no longer a team because we see each other once a month, hopefully once a week in person. And she feels we're losing that sense of working together towards one goal. On the other hand, I've had managers tell me they're fine with the hybrid culture. And, traffic here in Metro Manila is terrible. People spend 2-3 hours a day and a night going one way to work. So it's difficult.
There's a massive split. Personally, I find it far more when you have remote working. But you do lose that culture, you do lose that connection.
Well, I don't mind the working the people I report to, and I hope my boss isn't listening to. He's the chairman of the whole conglomerate, and he runs it as a traditional corporate culture.
Yeah.
If you're not at your desk, you're not working. You're probably streaming on Netflix or Amazon and taking more than your fair share of lunch, So
it boils down to the whole thing about integrity. Let's go. It's about character and integrity.
Yes, and there are all these systems now. You don't have to punch a Bundy clock, but there are all these apps where they can keep track of whether you're online or how much time you're streaming and so on, which people hate. The kids do not like it. I don't like it
because then they've got to actually do some work.
Yeah, and I don't want somebody watching all the time.
I agree with you.
Because I think if you can save on time in traffic, you're more productive by using that time to work. And what happens is that the work hour or the workday winds up stretching when you're at home. It's hard
Yes.
to say 5 o'clock, I'm offline, when you may not have been online the whole 8 or 9 hours.
I had the question about innovation. When you look at these small startups, how do you balance innovation with execution, especially when you're trying to scale a startup?
We found that tech is important. We only invest in tech-enabled startups, and we look for the problem they're trying to solve. And for me, one thing that's really important, Denise, is their business model. Are they making money? How do they make money? Is it scalable? Can they go global? Because the very essence of a startup today, because of the power of the internet, nothing is local anymore. I mean, everything. I mean, your podcast is potentially global. There are no barriers to anyone in the world listening to Denise Powell. You just have to get the word out there to enough people. And people, whether they're in Africa, Asia, Europe, if they're interested in your subject, they will tune in. So there are no borders to a startup, whether you're marketing something or whether you're doing a podcast or a YouTube program, whether it's just you and your dog playing, people like to watch that. And then all the dog food companies start gifting you with all kinds of stuff. And before you know it, you have a business.
This is true. What do you think the biggest challenges are for these small startup businesses?
Funding. I mean, you can only ask your family and friends for so much. Yeah. And that's the problem. At some point, you've got to make the leap from friends and family to getting actual investors trust you, believe in you. And that's when and you can't spend your whole life pitching. I've seen some startup founders go from one competition to another, win one competition to another, win the prizes, yet never really do the hard work of the day in, day out earning revenue.
And when you do get the funding, where do you think the first places that you should spend it?
Well, I think it's important to keep it lean. I think it's important to have a mature CEO. I mean, there's a difference between the founder, the creator, and the person who actually grows the business. And we've seen this in Apple and in other businesses, that the creator doesn't necessarily mean that he's a good CEO. He or she is a good CEO. So it's important to have somebody with a good head by your side, because we have seen startups go way off track. They become very successful, and then they start to throw big parties, buy big houses, and then within months, literally, these companies are on the brink of bankruptcy, and the investors are out of their mind. Which goes back to your point about integrity.
Yeah, exactly. But I'm sure you put barriers in place as well, that they can't spend all the money, and after a certain value, it has to be signed off by the board or whoever before they can just access all the funding.
Well, you'd be surprised. I mean, yes, some of these startups have 2 sets of books, or their board is, it's hard to keep track. I mean, we have a large portfolio of investments, so we often rely on the venture capital firms or firms with more people to do the due diligence, and that's when we'll come. But it can be risky.
Yeah. So in terms of looking at the next stage of growth for Ideaspace, where do you want to take Ideaspace over the next 6 to 12 months?
Well, the key for Ideaspace is to keep growing in terms of continuing to invest in startups, but it's time for us to harvest what we've invested in the past. We've been investing for 13 years. So we're starting to look for exits so we can plow that money back into investing in more startups and into operations. And the other important key for us, Denise, is to retain the confidence of higher management, which we sometimes forget. We're in our own lane, our own startup world, And we sometimes forget that we have corporate owners and that I report to a CEO of the conglomerate and to a board. And when you lose that connection, when you lose that trust, then you run a whole set of dangers.
And so, right now, what do you say one of your biggest challenges are?
My biggest challenge is making sure that Ideaspace keeps growing and that we continue to have access to corporate funding to invest and to operate. There are certain deals which are being set in place today, which I hope will come to fruition by 2026, both in terms of other establishments coming in as investors, are being able to work on programs both with the private sector and with the government. So we're in negotiations for a number of things. And we need for these agreements, these deals to work so that we can continue to do our job.
And so right now, if you could fix one issue currently in existence with like a click of a finger, what would that be?
It would be finding adequate funding to keep Ideaspace and QBO Innovation on track and to help them continue to grow and continue to invest and grow the local startup ecosystem. And for that to happen, we need success stories. We need more winners. We need more exits because it triggers the whole thing. You have a big success. You have a unicorn, a billion-dollar company that you invested in. Then everybody wants to come in. Local investors, family firms, foreign companies. But you need those successes.
Yeah.
And that's what we're looking for right now. That's a story that we want to tell.
So if investors want to get hold of you, what's the best place that they could get hold of you?
Well, I'm all over social media for good things, not bad things. And you just have to Google my name. But if you Google Ideaspace or QBO Innovation Hub, it'll show up there. But I have my own website, believe it or not. Denise, I just launched a book, which I forgot to mention to you, and you'll find everything you need to know there, about including a public email address, which leads to some very strange email exchanges from total strangers from the world. But those are the dangers of putting out a public email.
And so I'm assuming if you're a small startup as well, we could reach you on the same platforms.
Sure. We're happy to hear that. And if you're going to make us a lot of money, we'll certainly be we'll welcome you with open arms, wherever you may be.
So if you had one piece of advice that you could give any startup, what would that be?
They're the usual things. You've got to work hard. You've got to believe in yourself, in your idea. No one's going to believe in you unless you do. And I've seen people pitch, and you can see it in their eyes that they don't completely believe in what they're saying. So the belief, the passion has to be there, but also the flexibility to pivot when you realize your idea wasn't so bright after all.
I love this one. This one on the paper said, "Do you want to be right or do you want to make money?"
Well, I'd prefer to be both, but it's I'm not interested in becoming a priest, but I do have a gospel that I preach, and that is for young people, especially in this part of the world. You don't have to join a big company. You don't have to go overseas in order to do well. You can start your own company and create wealth in a shorter period of time for yourself, for your employees, and for your community. So check it out. If you have a bright idea that you believe in, if you have a problem that you think you have the solution for, think about starting your own company.
Love it. Love it. Well, for anyone who wants to reach out to Ideaspace or QBO, please see all contact details below. We'll have all the information right there. But in the meantime, Butch, thank you so much for joining us on this podcast. It's been absolutely wonderful having you on.
Thanks for having me, Denise. I've enjoyed it.